Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab, is taking a look at the big picture and looking at the S&P 500. It wasn't long ago the S&P, NASDAQ, Dow, and Russell all hit records. What are we watching now when it comes to the S&P today?
Well, I think, Nicole, it's a lot of the same. I hope traders aren't getting bored with this. You know, we had an opportunity maybe to pull back in the S&P 500, and we found the support at the 20-day moving average once more. You know, it's been a very, very infrequent close or trade even below the 20-day moving average. In this chart, it's the orange level. 65.75 is that current range approximately. I think now up to 65.90 actually. And that can very well continue to provide support for us. Look, you know, we often state in the market, we try not to fight against what we're seeing and trade what you see, not what you expect. And I think last week's pullback, very brief as it was, is a wonderful reminder of the health of this S&P 500 move. So at this point, with the close we got on Friday, I think a lot of traders suggest after that test of the 20, closing on Friday above the high trade from that pullback day where we hit the 20-day moving average became potentially an entry point, and we've only seen continuation of the trend since. So I think that bears watching. The 20 continues to be substantial short-term support. If and when we break the 20, I think traders would be wise to maybe monitor that 50-day. But boy, breaks of the 20 have been few and far between, dating back to about April 20 or so.
Yeah, I mean, we're not that far off the record. The record was 6699. We're at 6665. So we're not far off that. I know you're watching the 20-day moving average, so we'll keep an eye on that. Next up, we look at Celsius, which has been expanding its partnership with Pepsi. Tell me about the story here.
Well, a really fantastic move off the lows, of course. We're seeing it up more than 170% off of the lows achieved in February. Year to date, the stock's also up 123%. But this is, of course, following a very big drawdown. So not terribly out of the norm. I've given us an 18-month chart to look at because what I wanted to pay attention to was the breakdown level. That's the red line above us at about $68 a share. I think bulls are thinking that they have a chance to get there. The breakdown was significant here, but we've had a level of support held between 49 and 50. And then the last 2 days of price action brought us from below the 50-day moving average to above it. And it looks like a break of that downtrending white line that I've drawn in the chart here. So some traders might be looking at that $49 to $50 area as potential short-term support. And from a risk-reward standpoint, maybe today's red candle might offer a little better entry signal if your goal is to target that $68 level as an example. But as always, having a plan as to how you want to approach the trade moving into it makes a lot of sense for exit strategy, both above the market and below it. So always having a plan, very astute way of going about things here.
Yeah, right. You have to have a plan. Last but not least, we're looking at Lyft today. What jumps out on you on this chart, too?
Well, this one's twofold, Nicole. Lyft has had a pretty good year, also moving well off of its lows. Now, year to date, up 67%. Most recently, 125%. Pretty incredible move off of the April levels. So what's intriguing here, the 20-day moving average rising quite nicely. This gap zone is what we're probably short-term paying attention to. $20 or $21, either one could offer support. But the real intriguing move here is as we look at this on a weekly basis, we're going to kick this to a 5-year weekly view, and what you're going to see is a $10 trading range that we have now broken from, and could offer traders the opportunity to target that last level above us. So I think what we're seeing here is a ledge at 10, another ledge at 20, and then potentially a former support zone that could provide resistance at around 32 that may very well bear watching as well on the weekly chart. So Lyft, a little bit intriguing on a longer term time frame.
Yeah, understood. Kevin Horner, it's always great to see you. Thank you. Senior Manager, Trading Services Education at Charles Schwab, taking a look at Celsius, Lyft, and of course the S&P 500 and watching the key levels, the 20-day in particular.